Okay, for everybody that was not here on Tuesday, I just want to walk you through one example of bad debt so that you can see it clearly. This is this example I gave them. So let's walk through it on the board very quickly. All right, there's two methods for calculating bad debt, which is also called uncollectible accounts expense. The first method, as you read in your textbook, is the percent of net sales method. And the second one is the aging method. So let's really quickly walk through the percent of net sales method. Okay, in this example, it says the allowance for uncollectible accounts has a credit balance of $1,750. So we're gonna plug that into our T account. We wrote some things down already. So we literally, it says it's a credit balance, so that's on the right-hand side. All right, and then it says net sales for the year were $85,000. So let's do some basic math. 85,000, and in the past, 2% of the net sales have proved uncollectible. So that's all we're doing is taking that percent and multiplying it by the net sales. So by 0.02, if you do that math should turn out to be $1,700. That is your expense. So plug that into the journal entry. Journal entry, as every journal entry, has 5 parts. We have a date, at least one debit, and at least one credit. Those debits and credit names are in your textbook, as well as on the example that I gave you. The first one is an expense. Expenses are always debited, so that's on the top. It says uncollectible accounts expense. Plug in that amount, $1,700. Second one is allowance for uncollectible accounts. This is a contra asset off of your accounts receivable. So plug in the same thing, $1,700. For your reason why, it's to record bad debt percent method. There's your journal entry. But now to get the balance, we actually have this T account up on top that began with a credit balance of $1,750. So now we're gonna take this $1,700 allowance for uncollectible accounts and add another credit of that $1,700 because we credit it here. So we're gonna add it in here. So $1,750 and $1,700 should equate to $3,450. That is your end balance of this account. So just plug that number in right here. You are done with the first portion. Second portion is the aging method. Believe it or not, this is even easier than the first one. Let's make another T account, allowance for uncollectible accounts. It starts with the same balance, $1,750. But now on this one, again, if you see this, and it's also online for you, if you see this, it says very clearly that the aging of accounts receivable accounts results in an estimate of $4,750. That tells you what your balance is, $4,750. So you have a beginning balance and an end balance. So how do you tell the difference between the two? End balance and a beginning balance. In order to get your expense, all you're going to do is subtract those two numbers, right? Basic math. The subtraction between $4,750 and $1,750 is $3,000. That is your expense amount. So for this portion, you're literally going to do the exact same journal entry, but now you have an expense of $3,000. So all that will change is your $1,700 will be a $3,000. And for the end balance, so the first one is your journal entry, so do the same journal entry as above. The second portion, it's even easier because they already give you the end balance. So 4,750 is your end balance. And that is the homework, and that is what is on your test. So this is exactly as it is on your test. I will change the numbers and the names of the accounts, but this is the exact same type of problem that is on your accounting final for bad debt. Any questions? Give me a call, give me a text, give me an email. Thank you.